Welcome to Foundation Excellence, ladies and gentlemen. Today we're doing part 2 of question 2, which we'll be continuing with. Last time we were doing part 1, which was information A. Right now we are going to continue with information B. And then we're going to complete our statement of comprehensive income. After completing it, we'll post another video that will be on question 3. So I'll just get to it. At this moment in time, we are at additional information B. These are adjustments and additional information. Alright, so we're going to look at the information and then work it through the statement of comprehensive income. Remember that we need to finish this first. When we finish all of this information here, then we can be able to complete our statement of financial income. Alright, ladies and gentlemen, we are going to continue. The first additional information here says that water and electricity account for February 2023 has not yet been paid for February 2023, water and electricity. So we paid for the whole year, but except only for February. So we come back here, we look at our information, we see that there's water and electricity. Now we need to pay this water and electricity, right? Water and electricity that we already have for the rest of the year was 19,100, but for February it was not paid. So therefore we are going to add that amount of 1,830. So we're going to say plus 1,830. We are done with that transaction. We go to the next transaction, ladies and gentlemen. It says that stock with the selling price of 2,520 was donated to the local orphanage. No entry was made. So this was donated. It was not sold. Therefore, we won't have cost of sales, but we will have trading stock, which is going to be subtracted. Now in double entry, we need to know what subtracts the trading stock. In this regard, the thing that subtracts the trading stock is going to be donations. Therefore, we are going to include donations as an expense in our operating expenses. So we're going to include donations. We come back here, we're going to write donations. How much are the donations? We open bracket, we calculate. What are we given in values multiplied by what we need in percentage over what we have in percentage. What we are given in amounts is what we have in percentage. So what we're given in amounts here is 2,520. Now remember, we're given a markup. That's what we're going to use. And I already did the calculation for markup. The markup was 40, and then the markup was on cost. That means that the cost is actually 100%. So here they say that the selling price is 2,520, meaning that in the selling price there should be the cost and the markup. So we should have 140. So basically this amount in percentage value, it is 140%. So we are looking for 100 because the markup is on cost. So we have the cost at 100 and we calculate the markup on the cost, which is going to be 40% of the cost. So we're going to calculate here, multiplied by what do we need? We need the cost price, because the cost price is what we are actually recording. It is not a sale. It is a direct transaction that affects trading stock. And trading stock, whenever we subtract trading stock, we subtract it at historical cost. So we're going to need 100 over what we have, which is 140. When you do this in your calculator, okay, let's open the calculator. Now when you do this in your calculator, ladies and gentlemen, you will say 2,520 multiplied by 100 divided by 140, which will give you 1,800. That is the answer that you're going to write. So we are going to continue and then write that value where it's supposed to be written. 1,800. 1,800. This amount has been written. Why are we writing this as a final amount? Because this is the only transaction which is related to donations. There's nothing else that's written there, and they say that this was not yet recorded. So we are sure with donations that this is the amount. Okay. It is highly unlikely that you will be given multiple transactions on one thing, because we are trying to, the curriculum is trying to establish your knowledge in understanding what we actually do with regards to such concepts. Okay, so you will not get multiple transactions. That's 1,800. Okay, now, ladies and gentlemen, we continue. We go to the next one here. That's number 3. Number 3, ladies and gentlemen, it says, according to the physical stock count on 28 February 2023, the following items were on hand. Trading stock was on hand. Now we need to compare the trading stock that we already have written down or recorded in our books to the trading stock that's on hand. Now, if the trading stock is the same, we keep everything as is. But if the trading stock is lacking, therefore, we have a trading stock deficit. If the trading stock is more, we have a trading stock surplus. There are various reasons why we would have trading stock deficit and trading stock surplus. So I'll not get into that right now as we are doing the question paper. So let us check that information. We have got packing material. Packing material is close by, so we're going to start with that one. It's already here. You can see packing material there. Packing material for the year, it's the one that we bought at the beginning of the year, is 7,100. Okay, that's packing material. Now it says that the packing material we have on hand, it's 1,950. Therefore, we need to know how much was an expense in the packing material. What we mean by this, packing material, it's in its nature, it is an asset, but if we use it without getting any form of profit or any form of gain from it, it becomes an expense. The same as having a car, but the expense of a car is actually buying petrol. So buying petrol becomes an expense, but we need the car as an asset. So packing material in its nature, it is a asset, but it becomes a fully fledged asset at the end of the year under consumable stores on hand. So the amount that you have there of 1,950, that goes to consumable stores on hand. And also again, trading stock, the one that we have on hand, will go on consumable stores on hand. This, ladies and gentlemen, it is an account that is created at the end of the year, which is going to affect note number 4, which is trading stock. Actually, yeah, it's note number 5, not note number 4. Trading stock inventory. Yes, it is note number 4. Sorry about that. So that's what it is. So ladies and gentlemen, here, what do we need to identify? What exactly is it that we need to do right here, ladies and gentlemen? We need to identify how much we have used this year. So we're going to take the one that we already have on hand. We subtract it from the one that we bought at the beginning. This is 1,950. Now, remember I said to you that size, let me make it thinner. All right, now ladies and gentlemen, the reason I'm making that size thinner, I said that this one will be affecting our, whoa, that's too thin, can't see a thing. Right, let me just increase the size a little bit, maybe that will be better. Okay, so this, ladies and gentlemen, will affect our consumable stores on hand. That's going to affect our consumable stores on hand. This amount will go to consumable stores on hand, but we need to subtract it here in order to find out how much of the trading stock has been used by the end of the financial year. All right, so the one that has been used, how much, not trading stock, packing material, the packing material that has been used at the end of the financial year, then that becomes a, what does it become, ladies and gentlemen? It becomes an expense. Right, so you come back here, packing material. Now, where is our calculator? We open our calculator once more. All right, now in our calculator, ladies and gentlemen, we are going to have 7,100 minus 1,950. Right, so it will give us an answer, and that answer, ladies and gentlemen, is 5,100. So we have got 5,100. 5,000. Okay, my pen slipped. So here we're going to have 5,100. 5,150. That is the amount that's going to be written there. Okay, we are done with that, ladies and gentlemen. We go to the next one right here. Now the next one right here, we need to have space and do calculations specifically for trading stock, as it is not part of the items that we can have in a calculation inside there. What you call this? The statement of comprehensive income. Sorry about the delay. Right, now we're going to use this little space right here. going to increase the size a bit so that my writing can be a little bit more bigger. Right. So since the size is up, okay. Now we are going to calculate trading stock. Now trading stock, ladies and gentlemen, we're going to calculate what's going on in trading stock. Now we have got trading stock. Now in this trading stock, we take the amount of trading stock at the beginning of the year. Right? How much is the amount of trading stock at the beginning of the year? If you do not see it, I'm going to highlight it right here. It's 44,000. Right? There it is. It's 44,000. That's trading stock at the beginning of the year. So we have got 44,000. Now this 44,000, ladies and gentlemen, is going to be affected by that 1,800 that was for donations. Remember the 1,800 for donations, this one right here? We're going to subtract it because this was not recorded. So how is this being subtracted? It is subtracted via donations. So we're going to have minus 1,800. And after that, we need to find out how much is the stock on hand. Now, let us get the calculation out, the calculator out. That is 44,000 minus 1,800. That gives us 42,200. So we come here and we have 42,200. By looking at this now, we can be able to identify if whatever it is that we have is a trading stock deficit or a trading stock surplus. So what we had calculated on top there, it is the trading stock, the real trading stock that we have in our books. However, the real trading stock that's inside our houses, or our storehouses or warehouses, it is 41,000. So which one is more? Is it the one that's written in our books or the one that is on the stock count? Now the answer is simple, is the one that's on the stock count. So is this trading stock more or less? It's less. So if it's less, that means we are going to calculate trading stock deficit. Deficit means less, it means short. So it is short of a specific amount to reach that amount. So what is the deficit that we have here? We have 42,000. Snap. Right. Okay. We have got 42,200 minus 41,000. So how much is the trading stock deficit? How much stock is missing from our warehouse? Okay, so if stock is missing, obviously it's because sometimes items get broken and sometimes items get stolen, sometimes items get damaged. So the ones that are damaged, we might know about them and then we might still keep them and we might donate them. So that's why we would have a donation. But you have others which are stolen, maybe by our workers, so we need to investigate exactly what's happening by viewing the CCTV and all that, and looking at the transactions, who's going in the warehouse, who's not going in the warehouse, checking those kind of things, so that you can really identify what's going on to the stock. Oh, I'm missing 1 0 here. It is 41,000. There we go. Now let us continue with the calculation. The calculation is 42,200 minus 41,000, and this leaves us with 1,200. This is 1,200. This, ladies and gentlemen, is trading stock deficit. Now if it was vice versa, the one in our books was actually less and the one that's on our trading stock was more, it was going to be a trading stock surplus. The trading stock on hand at the end of the year was more. That was going to be trading stock surplus. So here it is trading stock deficit. So because it's a deficit, it means it's a minus. So if it's a minus, it's going to affect our expenses. It's going to be an expense because we need to account for the stock that has been taken. So we come back here and then you write trading stock deficit. Trading stock deficit. Now it's very important for you to always indicate your calculations in brackets close to your items, because sometimes you'll be writing calculations on the side because of being hurried up, you can't really label them. So it's best for you to actually write them in here, as long as you're sure. We had to determine if this trading stock was a deficit or a surplus first. That's why we had to write the calculations on the outside, and then we wrote trading stock deficit, then we wrote the calculation. So in this case, our trading stock deficit is 42,200 minus 41,000. Move the screen. Okay, minus 41,000. This is trading stock deficit, ladies and gentlemen, and the answer for this, ladies and gentlemen, it is going to be 1,200. 1,200, ladies and gentlemen, we have that. That is our trading stock deficit. We are done with the third transaction. So we go to transaction number 4. Insurance includes an annual premium of 3,960 paid for the period, listen, 1st September 2022 to 31 August 2023. Now, this amount is an annual premium, right? Now, here we need to look at our financial year. Now, we need to come back here and move our information and border our calculation. We're done with this calculation, so we need to border it so that it does not affect other calculations that we're going to calculate. So we border our calculation. This is what I usually tell my kids. I'm not using a ruler here, and my graphic pad is not, I don't know how to make it straight, so yeah, so I'm just gonna border it right here, so you can see that this calculation has been bordered. Now we go down, and then we come back here at the bottom where there's enough space to write other miscellaneous nonsense. Now the first thing that we need to do is to write our financial year. This is our financial year. Okay, let me use a ruler. This is our financial year. All right, so we have our financial year here. Now the information that we have in our books is for the year ended in 2023. So we've got here 2023, and then we've got 28 Feb, and then right here we've got 1 March 2022, and then right here it says that our insurance is a premium, is an annual premium. Annual means that is for the whole year. So this is an annual premium of how much? Of 3,960. So they say that this was paid for the period of September 1st 2022. So that should be around here. So we look at the months. It's going to be September, October, November, December, January, February. So that's 6 months. So we're going to look here. I'm just going to create dotted lines. Okay, so this is 2022, sorry. This is 2022, 1st September. So this is an annual premium. So it also continues all the way out of our year to next year, which is going to be 31 August 2023. So if this right here, it's actually 6 months into our financial year. So that means at the end of the financial year, right here in February, it is going to be 6 months. From there to here, it's going to be 6 months. So we need to remove the amount for the next financial year. Which gap principle are we using here? We're using the matching concept. Information for this year must end this year, and they must match for this year. So the information, the annual amount of paid it in advance for the next year is prepaid at that's prepaid expense, but it's information which is supposed to be allocated for next year. So it's going to be put as an income in our balance sheet. But here we are going to use matching concept. We're only going to take the amount which is only an expense for this year and record that amount. So how is the calculation going to be? The calculation is basically going to be simple. We're going to say the annual premium, which is going to be 3,960 multiplied by, we need only 6 months. Out of how much? Out of 12 months, because this amount is for how many months? For 12 months. So let's open our calculator once more and do the calculation. This is 3,960 multiplied by 6 divided by 12. Now, wrong calculation. I don't know what happened. All right, 3,960 multiplied by 6 divided by 12. That's 1,900. This is 1,980. So this we have. That's 1,980, ladies and gentlemen. That's the amount that needs to be recorded, or that needs to be subtracted for this year, because we need 6 for this 6 months and we need to remove the other 6 months. So we need to remove 1,980. So what is this calculation for? All of this is for insurance. Now, you don't necessarily have to do this timeline. I just did this so that you guys can understand what's going on. All right, so we have that amount there. We have that transaction is done. We are going to complete it now. We look at insurance. Oh, that's our insurance. In our insurance, we need to remove 1,980 because they say that the 3,960 was included. So now we need to remove a portion of that, which is the 6 months of that 3,960. So we'll be removing that right there. We come to insurance. We say subtract 1,980. Okay, so we are done with that. We don't close it just yet. As I said, we finish transactions first. Then we come back here. Insurance is done. We come to rent. Look at rent, ladies and gentlemen. It says rent for February 2023 has not yet been received. Rent was increased by 300 per month with effect from 1st July 2022. And they leave it at that. So what's going on here? We need to add something, but we need to find out how much is rent for every month. Okay, we need to add the rent that was not yet received. So how do we go about this, ladies and gentlemen? We go back to timeline. Let us go back to the timeline. I'm going to erase the timeline that I already created. This one, we're done with this calculation, so I don't really need it, but you might need it for your paper, but I don't need it here. So yeah, all right, and they say here that the rent, ladies and gentlemen, was increased. When was it increased? July. So we need to calculate how much is it that was increased in July. Now, when you look at the information here for rent, look at the rent income, ladies and gentlemen. How much is the rent income? That is 36,200. So we're going to come here and write our calculation. This is calculation for what? For rent income. We firstly need to deduce how much rent is it, that how much is the original rent before the increase. All right, so we say how much is the rent before. The rent that we have here is for how many months? It should be for 11 months. So I'm just going to double check it, but before I double check it, let me just write the amount for rent. That is 36,200. Now let's just check the information again. Now the information here, it states that the rent for February has not yet been received. Therefore, the rent that we have here is definitely for 11 months. So what are we going to do here? We're going to say this amount, we are going to minus 300 multiplied by how many months? Why am I saying we're going to minus 300 multiplied by? Because you need to find out how much is rent for 1 month now. Okay, so right here we are going to find out how many months has it been since the rent increase. We start counting from July until January. So we're gonna say July, August, September, October, November, December, January. So let's start again. It's July, August, September, October, November, December, January. Now this, ladies and gentlemen, gives you 7 months. So we're going to subtract 300 multiplied by 7. Then we can find out how much was rent before the increase. Now, ladies and gentlemen, how much was rent before the increase? Let's open our calculator and do our calculations. This is 32,200, 36,200. Oh, sorry, I'm doing the whole calculation. Let me start with the bracket first. So it's going to be 300 multiplied by 7. So we are going to have 36,200 minus 2,100. So it's 32. We are going to do the calculation now of 36,200 minus 2,100. Now this is the rent for the whole 11 months without the increase. This is 34,100. We're going to divide this by the number of months that we have. In this regard is not 10, but it's rather 11. So it's going to be 11 months. And then we know now how much is rent per month before the increase. So we have that 34,000 divided by 11. Whoa, why did I put that? Right. So that simply means that rent for 1 month, it was 3,100. So with the increase, rent for 1 month, it is how much? The increase is 300. Therefore, rent for 1 month, it is 3,400. I did this in detail so that people who don't understand are getting a full understanding of what it is. Okay, so there we have. This is for 1 month. We only need 1 month. So this 1 month, ladies and gentlemen, we need to subtract it. We need to add it because it was not yet paid. We need to add it. So we have the rent here, the full calculation. We come back here. Oh, look at that. The ruler is available. Okay. Oopsie. All right. We have rent income here. We're going to add to the rent income. How much are we adding? 3,400. Okay. So we are done with that transaction. We go to the next transaction, ladies and gentlemen. Now, that's transaction number 6. It says here that R. Adam, a debtor who owed 1,200 to Sebenza Traders, was declared insolvent. His estate was able to settle half of his amount or amount owing. Write off the outstanding amount. So it means that this person was able to pay his debt. So the debt that he was able to pay, that debt, it is considered as a receivable. But the debt that he was not able to pay, it is not considered as a receivable. It is just considered as a bad debt. So we are going to conclude with this. We're going to finish this transaction just now. All right. Yeah, we're going to do this transaction. So let us go and do the calculation for this. This is going to add to bad debts. So we look for bad debts. Here's bad debts. We need to add to bad debts, right? So we come back here. And then we need to add to bad debts. What are we adding to bad debts? We open brackets. This person originally owed us how much? He owed us 1,200. So we're going to open brackets and say 1,200 multiplied by 50 cents per rent, because that's half of what he owed. Half of what he owed he could not pay back. So we're going to say this multiplied by 0.5, which is 50 over 100. Then we close that. Then this is the first bracket. We're done with this calculation, which is obviously 600. For those of you who like to take shortcuts, they will be writing just 600. I've just wrote this calculation as a part of the whole thing. All right, so yeah, ladies and gentlemen, that is transaction number 6. So this is the first half of part 2. Second half will be done very soon. Thank you.